Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll be breaking down exactly how to file your own taxes in Canada. I'll go over the basics of how your tax bill or tax refund is calculated, and I'll provide a step-by-step walkthrough on how to file your Canadian tax return using TurboTax. I've been using TurboTax for the past 8 years, and it's super easy to use for beginners. But if you'd rather use SimpleTax or UFile, the same steps will apply. In this video, I'll be focusing on the tax filing steps that all Canadians need to know. This includes employment income from T4 slips, high interest savings accounts, RRSP deductions, tax credits, and other deductions. When it comes to business income and investment income in a taxable account, so outside of a TFSA or RRSP, tax filing becomes more complicated, so I'll be saving that for a separate video. For today, I want to focus on taxes for Canadians who work a full-time job. Also, I'm going to assume that you understand the basics of how Canadian taxes work. What are tax brackets, marginal tax rates, tax credits, and tax deductions? I've already gone over all of these basics in my video on how Canadian taxes work, so click the pop-up at the top right to watch that video first and then come back to this video. Before we jump into the tutorial, let's go over how your taxes are calculated. First of all, you have to enter your gross income. This is how much money you made this year before any taxes or expenses. For most Canadians, this gross income will be their salary from their job. If you also earned investment income, so interest, dividends, or capital gains in a non-registered account, so outside of a TFSA, RRSP, or RESP, then you have to add this investment income into your gross income. If you run a side business, then you'll have to include your self-employed business income as well. And if you're a landlord, include your rental income. If you withdrew money out of your RRSP, hopefully during retirement, then include this RRSP withdrawal as well. All of these income streams you earned throughout the year get added together as your gross income. Luckily, you don't get taxed on this full amount. We apply tax deductions to decrease our taxable income and save us money. The most common tax deduction available to all Canadians is the RRSP. Whenever you contribute money into your RRSP, you can subtract this amount from your taxable income to reduce your tax bill. I have 2 whole videos on the RRSP, so check those out. Another common tax deduction for most Canadians is the work from home deduction. And if you run a business, you can claim business operating expenses as a tax deduction. This is one of the best benefits of earning business income, which I'll cover in my upcoming business series. Now we have our gross income and we subtract all of our tax deductions, giving us our taxable income. This is the amount we actually pay taxes on. Our taxable income, not our gross income, is what we put into our tax brackets to calculate our tax bill. TurboTax will automatically calculate our tax bill for us, but we're not done yet. Now we try to reduce our tax bill even further by applying tax credits. Tax credits will reduce our tax bill by a fixed amount if we're eligible for them. Your income or tax bracket doesn't matter. Everyone benefits equally. The great thing is that TurboTax will automatically find the tax credits that you're eligible for to minimize your tax bill. The most common tax credit that applies to everyone is the basic personal amount, which saves every Canadian up to $2,071 in taxes. This is designed so that people with incomes below $13,000 won't pay a single dollar in taxes. And this is important. Tax credits can either be refundable or non-refundable. A non-refundable tax credit can reduce your tax bill to zero, but it will stop there. A refundable tax credit can reduce your tax bill to zero, and whatever money is left in the credit will be given to you as cash. After we've applied deductions and tax credits, TurboTax will calculate our final tax bill. But if you earn money from a job, you'll know that taxes have already been deducted from every paycheck that you earn. So by the end of the year, you've probably already paid your tax bill. In fact, you might have overpaid. If you have tax deductions and tax credits, then you've probably paid more money than you should have throughout the year, in which case the government owes you money, and so you'll receive a tax refund. But this automatic tax payment only applies to your paycheck from a job. Other income streams don't withhold tax automatically. So if you have business income or investment income, you haven't paid any taxes on this yet. You pay those taxes when you file your tax return. So we take our tax bill that TurboTax calculates and we subtract the taxes that we've already paid. This will give us our tax owing amount, or if we've overpaid, we'll receive a tax refund. So that's how Canadian taxes are calculated. Now let's go through a step-by-step tutorial on how to file your taxes in Canada using TurboTax. Stick around to the end of the video where I'll compare the different versions of TurboTax, and I'll include my referral link down below to get 10% off all TurboTax products. For this tutorial, I'll be using TurboTax Standard Edition, which can file 8 tax returns, so it's good for a whole family or 2. Let's check it out. Okay, so I've started up TurboTax 2020, the Standard Edition, and we're going to start a new tax return. The great thing about TurboTax is that they will ask you a series of very simple and straightforward questions to really guide you through the whole tax filing process. So that's why I recommend doing the easy step method. You can do the more complicated forms method where you're actually filling out each official tax form document the same way as if you were filing a paper tax return, but I don't recommend this. Do the easy step method. So this is what the TurboTax layout looks like. This is the main panel where we'll enter our information and it'll ask us questions. You'll notice at the top left here, you'll always see a live up-to-date value of our tax refund or our tax owing. On the left panel here, you'll see the navigation menu where we can jump ahead or go back to a previous step. And on the top right, we'll see the tools bar. As I mentioned, this standard edition allows us to file 8 individual tax returns. Let's get started. So here is the general workflow of TurboTax. We'll start off by answering a bunch of questions to build our profile. This will tell TurboTax which sections we need to fill out, and it will allow TurboTax to find all of the tax credits and tax deductions that we're eligible for to minimize our tax bill. So make sure you answer these questions honestly. Then we enter all the information on our gross income and our expenses. Then the largest tax deduction, which is the RRSP contributions. Then we fill out all remaining tax deductions and tax credits. Then we move on to the provincial section. Then we do a final review, and then we submit our tax return. The personal info is very self-explanatory, so I'm going to go through it very quickly. Select your marital status, so I choose single. So at the end of the year, which province did you live in? I choose Ontario. So you enter your personal information, your date of birth, your SIN number. I'm going to put fake information here. And you'll notice that automatically, I already have a $300 tax refund. And that's because I said I live in Ontario. And everyone in Ontario receives a $300 refundable tax credit for the Climate Action Incentive. But you can see, I didn't have to do anything. I didn't have to apply for this credit. TurboTax automatically does it for me. Okay, now we enter our mailing address and answer these basic questions. Now it asks, have I filed a tax return before? TurboTax remembers your previous tax returns. So you can automatically import information from last year's tax return, such as unused RSP contributions that you're carrying forward to a future year. If you filed a tax return before, it's going to ask you for your net file access code. You can find this code in your previous year's notice of assessment. This is just for added security. If it's your first time filing a tax return, you don't have to enter this. I'll say this is my first time filing a tax return. Now I just answer these bottom questions and we move on. Did my marital status change? Nope. Do I have children or dependents? Nope. Now it's going to ask me a bunch of questions on what kind of money I earned in 2020. So, did I work in 2020? Yes, I was employed, and my job, my employer, gave me a T4 tax slip. The vast majority of Canadians are going to be selecting this option. The T4A slip is used if you received CERB benefits or scholarships. Now we answer these questions. For me, it's no to all of them. And now, do you have employment expenses? Usually, for most Canadians, the answer is no. However, with COVID, a lot of Canadians are forced to work from home. And so now we have work from home expenses. So we select yes. And now, did you receive any retirement income? If you select yes, you choose the applicable one. So if you received old age security or you made an RRSP withdrawal, select those options. But for me, I'm choosing no. Now, did you receive income from investments? In this video, I don't want to go over investments. That gets much more complicated and that's a whole separate video on its own. So I'm not going to talk about taxable income from stocks like dividends or capital gains, but everyday Canadians must have an emergency savings fund in a high interest savings account. And the interest you earn in this savings account will be considered taxable income. And that's included in this category, so we select yes. Our bank will provide us with a T5 tax slip, which includes the total interest we earned in our savings account over the course of the year. So we select yes, and we'll get to the T5 slip later. Do you have interest not on a tax slip? No. Did you buy stocks, bonds, or real estate? You can say yes. You don't pay any taxes when you buy investments, only when you sell them for a profit in a non-registered account. I'll save the rest of the investing questions for a separate video. Next, did you have self-employed, rental, or other income? Again, this is a business income question. That's going to be a whole separate video. So I'm going to say no for now. Did you own a foreign property? No. And then, were you a student? If you pay tuition, you can claim tuition credits to lower your tax bill. I'm not going to cover tuition credits in this video, but a large portion of you guys are in your 20s and 30s, and we're still paying student loans. The good news is that the interest you pay on student loans counts as a tax deduction. So I'll show you how to do that here. Now we have to answer a bunch of questions on how we spent our money. Here's a big section. Do you have an RRSP? Yes, I hope you guys do. Did you make contributions to your RRSP? Yes, I did. Did you make a contribution in 2020 or in the first 60 days of 2021? So up until the end of February? Yes, I did. Do you have unused contributions from previous years? I'm going to say no, but in this tutorial, I'm going to show you how to carry forward RSP contributions for future years if you think that your income will increase in the future. And so I say yes, I want to carry forward my RRSPs, and we'll get to this later. For this tutorial, let's say that my employer offers a registered pension plan, which means that every paycheck, I automatically contribute to this pension plan the same way I would to an RRSP. And some employers will actually match your RPP contributions, giving you free money. We'll get to this when we talk about the T4 tax slips. Have you used the lifelong learning plan or the home buyer's plan? I'm going to be making a whole video on these two topics, so I'm going to say no here. But if you did make an RSP withdrawal using this plan, you will have to include that in your tax return, and in future years, you'll have to start making repayments. Did you make any donations? For this tax return, we'll say no. Moving expenses. Were you forced to move for work or school? I'm going to say no. Medical expenses? No. Did you buy a home and did you sell a home? I'm going to say no for both. And home accessibility expenses? No. Okay, we're almost done with the questions, so let's run through these. Did I have any losses this year? Remember, losses in a TFSA or RRSP do not count. I'll save this for my investing tax tutorial, so we'll say no. Were you a volunteer firefighter? No. And are there any other tax deductions? Scan through these if any apply to you, but I'm saying no. Tax installments, I'll cover this more in detail in my business tax tutorial, but the majority of Canadians do not need to make tax installments. This is where the fun begins. Now we start entering our income and tax slips. Another great feature is that TurboTax can connect to your CRA account and automatically import tax slips, such as your T4 from your employer or your T5 from your bank. This is a great feature since it will save you time and reduce the risk of errors. But for this tutorial, I'm going to manually enter my tax slips to walk you through the whole process. So we choose Skip Import. So we start off with the most important tax slip for all Canadians, the T4, which is for employment income from a part-time or full-time job. Your employer will give you your T4 at the end of February or March. Let's look at the fake T4 that I made up. So you'll see a bunch of boxes with a few numbers in them. All we have to do is enter these numbers in the matching boxes on TurboTax. So we enter the employer name and the province, which is Ontario. So employment income, box 14, this is the most important number here. This is our gross income before tax, so our salary. You can see in box 14, I have a salary of $80,000. So we enter that. Box 22, income tax deducted. This is how much tax I've already paid from each paycheck. So I enter here $12,000. Box 16, CPP contributions. This is how much money I've contributed to the Canadian pension plan. Here I've maxed out the CPP contribution for the year, so I enter $2,898. Box 24, EI insurable earnings, so we enter $54,200. Box 17, QPP, that only applies if you live in Quebec. Box 26, CPP pensionable earnings, so we enter $58,700. Box 18, my employment insurance contributions. Again, this is the maximum contribution amount in 2020, so I enter $856.36. Box 20 is RPP contributions. This is where my employer will automatically contribute to the pension plan every paycheck. So throughout the year, I've made $2,000 of RPP contributions. So we enter that. In this example, my employer offered a matching program. So if I put $2,000 into the RPP, my employer matched that contribution. So my employer also put in $2,000. So in total, I've put in $4,000 into my RPP. That $4,000 is in box 52, the pension adjustment. This affects my available RRSP room. If you have any other taxable benefits, that'll show up in the bottom. In this example, we have box 34, which is the personal use of a company car. So here I have a taxable benefit of $1,000, so we enter that. The taxable benefits in this section will depend on your job. So now all the information on this T4 tax slip has been entered into TurboTax, and that's all we have to do. We just match the boxes. If you have a second job, you'll enter another T4. In this example, I only have one job, so I click Done with T4. As soon as I click that, you'll notice that my tax owing at the top left has changed. Before I entered any income, I had a green tax refund of $300. Now that I entered my gross income in my T4, TurboTax recalculated, and now I have a red tax owing amount of $3,588. Every time you complete an action on TurboTax, this automatically recalculates. Here we see a summary of my T4s. I only have one job, so one T4, so I click Done. And now we move on to the T5 tax slips. Remember, I earned interest in my high interest savings account, and so my bank will provide me with a T5 tax slip. Your tax slip will look like this. This is a T5 from EQ Bank, which is my favorite savings account in Canada. I'll talk about the T5 in greater detail in my tutorial on investment taxes, since the T5 covers many parts of investment income, such as eligible dividends and the dividend tax credit. But in this example, we're only looking at the interest from a savings account, so it's only one box, box number 13. In this example, I had a lot of money stored in a savings account, and so throughout the year, I earned $2,000 in interest. As before, I entered this $2,000 amount in the matching box on TurboTax. And I select the source as bank interest. Good, that's it for the T5. As soon as I click done, you'll notice that the tax owing on the top left will increase. That's because I'm increasing my taxable income by this $2,000 of interest, and I haven't paid any taxes on this interest yet. And you can see my tax owing jumped up to $4,181. At this point, I've entered all my gross income from my salary and from my savings account. Now it's time to handle deductions. Due to COVID, I was forced to work from home, and so I can claim a work from home tax deduction. So we click yes. I can make a whole video on this, but for working from home, we have two options, the detailed method and the flat rate method. The detailed method might earn you more money, but it does take a lot more work. If you have to make purchases to handle working from home, you're going to have to get approval from your employer before you make these purchases. You'll have to provide receipts of these purchases, and you'll have to get your employer to fill out a T2200 form. You can avoid all of this by using the flat rate method, where you get to claim a deduction of $2 per day that you were forced to work from home, up to a maximum of $400. You don't need to get your employer's approval, you don't have to provide any evidence or receipts. It's very simple, and that's what we'll do. So we choose the option that we didn't receive the T2200 form, and we say yes, we were required to work from home at least 50% of the time for 4 consecutive weeks, and we click yes, I was required to pay home office expenses. We click continue, and now it will ask us how many days were we required to work from home due to COVID. Let's say I worked from home 250 days, and remember, I'll get a tax deduction of $2 per day with a maximum of $400. So I'll get this maximum $400 deduction. As soon as I click continue, you should see my tax owing amount go down because now I am decreasing my taxable income by $400. And boom, it went down. Do I have more than one employer? No. Here is a summary of my employment expenses. You can see I've already claimed my $400 working from home deduction, so we click done. Other employment expenses? Nope. Investment profile? Again, I'm not covering investment taxes in this tutorial, so we skip it. Here's a summary of our income. So I have a salary of $80,000 and I have $2,000 of interest income. So I have a total gross income of $82,000 for the year. The next step is RRSP deductions. We have to enter our RRSP deduction limit, which we can find on our previous year's tax return. So we check our 2019 Notice of Assessment, and if we scroll down to the bottom, we'll see our 2020 RRSP deduction limit and enter it here. In this example, let's say I have a deduction limit of $50,000. So essentially, I have $50,000 of available RRSP room. Is my deduction limit 0? Nope. So that means I'm able to claim a tax deduction from my contributions. Now we have to enter our RRSP contributions. When you contribute to your RRSP, you'll receive a tax slip from your bank or your broker. I'll show you how to find these RRSP tax slips from Questrade, my favorite online broker. So I logged into Questrade and I go to Reports and Tax Slips. I select the account, in this case RSP, and you'll see the tax slips available for that given year. For 2020, I have 2 RRSP tax slips. Here are the RRSP tax slips that I made up. Remember, to claim an RSP deduction, you can use the contributions you made in the year 2020 or the contributions you made in the first 60 days of 2021. That's why we have 2 different tax slips. In the first tax slip, it says that I made $15,000 of RRSP contributions in the year 2020. The second tax slip says that in the first 60 days of 2021, so between January 1st and March 2nd, I made an additional contribution of $5,000 into my RRSP. So we enter this information into TurboTax. The RSP issuer is Questrade. So the contributions made in 2020, that's from the first tax slip. So we enter this number right here, $15,000. Contributions in the first 60 days of 2021, that's from the second tax slip. So that's the $5,000 you see here. So we enter that. So in total, I can claim an RSP tax deduction of up to $20,000. Since I'm claiming such a large tax deduction, as soon as I click done, you're going to see a huge drop in my tax owing amount. In fact, this might go from a negative tax owing amount to a positive tax refund. Let's see what happens. Boom. You can see it went from me owing $4,000 to now receiving $2,000 in a tax refund. That's the beauty of the RSP. And here you can see an RSP contribution summary. Now here's the question. I made a $20,000 contribution to my RSP this year, so I can reduce my taxable income by $20,000. But remember, I don't have to deduct the full amount this year. I can carry forward some of these contributions for a future year. Let's say that next year, I expect my income to increase and bump me up to a higher tax bracket. In this case, I would save even more money if I carry forward some of my RSP contributions and claim that deduction next year rather than claim the full amount this year. So that's what I'm going to do. I'm only going to claim a tax deduction of $15,000 and I'm going to carry forward $5,000 to next year. So now this number, my tax refund, will decrease because now I'm claiming a smaller tax deduction, but next year I'm going to receive an even larger tax refund. So let's see what happens. And yep, my tax refund decreases to $500. Okay, did I have a pooled registered pension plan? No, I didn't. And now for my registered pension plan, my RPP, I don't have to do anything here since I've already covered that in my T4 tax slip. The RSP Wizard, this is a cool tool you can use to help plan out how much money you should contribute each year to your RSP. You just play around the numbers and you can see its effect on your tax refund. Okay, here's the RSP summary. In 2020, I contributed $15,000 to my RSP. In the first 60 days of 2021, I contributed $5,000 for a total of $20,000. I don't have a home buyer's plan or lifelong learning plan. I'll cover that in a later video. I decided to only claim a $15,000 RSP tax deduction this year, so I'm carrying forward $5,000 of my RSP contributions to a future year. You'll also see the $2,000 that I contributed into my RPP that I already covered in my T4 tax slip. We're almost done. Now let's see if there's any other tax deductions or credits. So go through this list and see if anything applies to you, but for me, none of the above. Earlier on, I said that I won't be covering tuition credits for students, but I will be covering student loan interest since that affects a lot of you guys. If you're making monthly payments to pay off your student loans, you don't get to deduct this full amount, but you do get to deduct the interest you pay on these student loans. I went to university in Ontario, so I got my student loans through OSAP, and this is a tax slip that I receive every year from OSAP. And you can see here that in the year 2020, I paid $1,000 in interest on my student loans. And this is what I can deduct. So I entered this amount in TurboTax. If you have any interest from previous years that you haven't claimed, you can put that here. And now when I submit this, my tax refund should increase. And that's what we see. In the student summary, this is where you would see the tuition credits that you claim. And in the bottom, you'll see the $1,000 of student loan interest that I claimed. Here's a summary of my deductions. You can see my gross income is $82,000. Remember, that's from my salary and my savings account. My RSP and RPP deductions is $17,000 in total. Remember, I decided to claim $15,000 of my RSP contributions this year and the $2,000 of my RPP. In the employment expenses, you'll see the $400 deduction for working from home. So this gives me a taxable income of $64,434. This is what I actually get taxed on, and this is much lower than my gross income thanks to deductions. Remember, at the beginning of this video, I said that everyone in Canada gets to claim the basic personal amount tax credit, which lowers everyone's tax bill such that if you make less than $13,000 a year, you don't pay anything in taxes. And here's some more federal tax credits that TurboTax automatically applies for you. At the bottom, you'll see the $12,000 that I've already paid in taxes for my T4. And remember from the beginning, I received a $300 refundable tax credit for the Climate Action Incentive Program. That's where this $300 comes from. Now we deal with any provincial credits or deductions. I live in Ontario, but this will depend on what province you live in. Here's a list of popular tax credits in Ontario. You can always click on them to find out more. This one here is very common for lower income families if they're paying rent in Ontario. I'll show you the steps on how to apply, but I know that in this example, I won't be eligible since I have a high income. And you'll see the Climate Action Incentive, the $300 tax credit that I've already talked about and received. Here's how you apply to the Ontario Property Tax and Rent Credit. I'll fill this in super quickly. Just enter your address, how much rent you've paid, and how much in property tax you've paid. And if your income is low enough, you'll receive a tax credit. Now I get to choose. Do I want a one-time payment at the end, or do I want monthly payments throughout? I would choose monthly payments, so select no. At the top, we're applying to the Ontario Energy Credit. And now the Northern Ontario Energy Credit. This only applies if you live in Northern Ontario. The majority of the province lives in Southwestern Ontario, near Toronto, but if you live in Northern Ontario, definitely take this money. We've already claimed the Climate Action Incentive Credit since we live in Ontario, but this also applies if you live in Alberta, Manitoba, or Saskatchewan, but the numbers might be different. So I qualify for it, and TurboTax has already applied this $300 tax credit for me. But if I live in a rural area outside of these big cities, I can gain an extra 10%. I live in Waterloo, so this doesn't apply to me. So here's the $300 tax credit I get. Here is our provincial tax summary. There's a few things I want to point out, like the Ontario income tax. Remember, you pay both federal and provincial taxes. In this case, I paid $4,061 in provincial taxes to the Ontario government. Also, everyone has to pay into the provincial health plan. In Ontario, it's called OHIP, and that's the $600 you see here. Now we're pretty much done. I've claimed all the credits and deductions that I'm eligible for, and right now I'm sitting on a tax refund of $735. That means that I've overpaid in taxes, so the government owes me money, so they'll pay me $735 through direct deposit in a few weeks after I submit my return. Let's do a final review and finish this up. Here are some CRA questions, so enter your citizenship and your language preference, and a few short questions. TurboTax will give some tips and warnings, just some common errors that people make, so go through them to make sure that nothing's out of place. TurboTax will offer to set you up with an accountant to review your tax return before you submit. This costs $55. It's totally your call, but I don't think it's worth it for most Canadians unless you have complicated business income. TurboTax automatically applies for the GST/HST credit, which is designed to help low-income Canadians. However, I'm not eligible for this, so I get nothing. And here you can see that I have an overall tax refund of $735.01. Now you can save this tax return as both a PDF file and as a TurboTax file. Definitely do both. And now we're ready to finally submit our tax return through NetFile. NetFile is CRA's software that they use to handle online tax returns. This was a made-up tax return with fake information, so I'm not going to submit, but just follow the steps. And in this case, since I have a tax refund, I will receive this tax refund a few weeks after I submit. If I had a negative tax owing amount, I would have to pay the CRA this amount. I can pay them with my debit card, a bank payment, or a credit card, but they will charge you extra for the credit card approach. So there you have it. That's how you file your own Canadian tax return. If you want to use UFile or Simple Tax, now called Wealth Simple Tax, the steps will be nearly identical, but TurboTax is my favorite. I always get the standard edition, which you can find at any Best Buy or Walmart for $35. But if you use my referral link down below, you'll get 10% off any TurboTax software. Plus, I'll get a small referral bonus as well. The standard edition allows you to file 8 individual tax returns, and you can download and install it on 5 separate devices. I buy this every year and share it with my family and friends. So for only $32 with my referral link, you'll be able to file taxes for 8 people. That's only $4 each. If you don't want to share with anyone and you only want to do taxes for yourself, the cheapest option is to buy TurboTax online. You won't have to install anything. It's all run on your web browser, and you can get the same standard version for only $18. But this $18 is only for one tax return. You can't share it with anyone. There are also more expensive versions like Premier and Home and Business, which can help guide you through investment income, rental income, and self-employed business income. But honestly, the standard edition can handle all of that, and it's much cheaper. I've been using the standard version for 8 years, for even my most complex business taxes. The more expensive versions will just hold your hand a little bit more, so you might want to consider it if you're new to business taxes. But don't worry, I will be making a tutorial on filing business taxes and investment taxes to help you out. Remember, the deadline to file your taxes is April 30th, but the sooner you file your taxes, the sooner you'll receive that tax refund. And make sure you check out the other videos in my Canadian tax guide to learn other tax saving tips, including tax sheltered accounts like the TFSA, RRSP, and RESP. Thanks for watching, guys, and be sure to like, comment, and subscribe if you found this video helpful. Every thumbs up and comment really does help me build this channel on YouTube, and hit that bell icon to be notified of my new videos. And if you'd like to follow me on Instagram or Facebook at Canadian T-shirt, click the links in the box below, or click the links on my homepage. Thanks everyone, and I'll see you guys on the next episode of the Canadian in a T-shirt. Bye guys.
Hey y'all, Jen here from Finder.com. Today we're talking about one of the only sure things in life, taxes. As April 15th nears and W-2s start rolling in, it's time to file your federal and in some cases your state taxes. We'll be showing you how to file your taxes online with Intuit TurboTax. It's friendly to first-time filers and can be fairly inexpensive. Let's get into it. Before you hop onto the TurboTax website, first you need to collect a few documents that you'll need once you get started. Typically, this includes your social security number and the numbers of anyone else on your return, a government-issued ID like a driver's license, your W-2 or 1099, any earned interest on private investment accounts, your Form 1095 and any other medical bills, mortgage interest and property taxes, education expenses, small business expenses, retirement contributions, and charitable donation receipts. Before you can start your return, you need to make an account. Simply fill out the form with your email address and choose a user ID and password. Make sure it's a strong one too, since you'll be inputting a lot of personal and sensitive information. Next, add your name, date of birth, and zip code to start. You'll then add information about your filing status, including whether you're married. From there, select any of the situations that apply to you from the past year. It then asks for more details about your previous year's finances, like whether you took on medical debt, traded cryptocurrency, or received dividends. Continue on by entering even more personal information, such as your social security number and what states you lived and worked in. Next up is diving into the nitty-gritty of your federal taxes. TurboTax takes you through the process one step at a time and lets you save your place and come back at any time. Perfect for if you need a quick break.
The harder you push, the faster we will all get out of here.
Your W-2, 1099, 1095, and charitable donation receipts come into play in this section. Some documents can be uploaded and auto-filled, or you can type in the information yourself. Once you get through each section, TurboTax will prompt you to fill in anything that you may have missed and review your progress as you go. If any of the states you lived in the previous year have state taxes that need to be covered, you'll head to the next step. Otherwise, you can skip down to step 6. State taxes are a lot less intense than federal. In fact, the software will import the information from your federal taxes and process the state taxes with very little additional input from you. A few clicks and you are all set. All right, you're almost ready to file at this point. It's time to select what refund method you want to use. Depending on when you file, you may even be able to apply for an advance on your return. Your choices are the following. Direct deposit into your bank account. This usually is the fastest. Receiving a prepaid TurboTax debit card, receiving a paper check in the mail, applying the refund to next year's taxes, or buying U.S. savings bonds. Once you select your preferred delivery method and filled out any necessary info to accompany it, like bank account information or your direct deposit info, it's time to file. Well, it's time to review everything, then file. You can take one last look at all the sections and make sure nothing looks off or missing. E-sign the document once everything looks up to snuff and you're on your way. It will likely take a while for the IRS to accept the submission, anywhere from a few days to even a few weeks. It can take even longer to process it fully. To get written instructions on how to file online and a breakdown of the pros and cons of each filing method, read our guide linked below on finder.com. To get even more help navigating the world of personal finance in video form, go ahead and hit that subscribe button. Plus, you can give this video a like while you're there. More questions about filing your taxes? Leave a comment and we'll get back to you.
How do you do your taxes exactly? The Canada Revenue Agency expects you to submit your personal income tax return by April 30th of every year. If the due date falls on a weekend, the CRA extends it to the following business day. So the due date for filing your 2021 return is May 2nd, 2022. If you're self-employed, your return date is due on June 15th, 2022. But if you owe taxes, you are still required to pay them by May 2nd. To start preparing your taxes, first, you'll need some personal info, including your social insurance number, date of birth, and last year's notice of assessment. Second, you'll need to get all your slips and receipts together. These are based on the types of income and expenses you have. If you're employed, you'll need a T4 form, which is filled out by your employer. If you're self-employed, you might need a T2125 or a T5013. If you're a student, you might need a T2202 for tuition fees. For investment income, you'll need a T5 form, and so on. Third, make sure to keep your expense receipts or invoices to claim deductions you're eligible for. With TurboTax, you can automatically import your tax information from your CRA account. This means you get a head start on your return. TurboTax can also help you find all the credits and deductions that apply to you and guide you through all the steps for filing your return. With TurboTax, you can file on your own, get help and advice from tax experts, or even have a dedicated tax expert do your taxes for you. Visit turbotax.ca and get a free tax checklist to help you stay organized this tax season.